Hello, and welcome to another episode of Talks with the Tax Cop. I'm yours truly, Patrice L. Berry, aka the Tax Cop. And this is another episode of the Tax Cop. So now, before we get into everything, anybody watching the video, like, my hair looks crazy. Y'all don't pay me no mind. My ponytail just is not ponytailing. All right, so today, and I look like I'm gonna take it down, right? When you're so self-conscious, you're like, oh, I gotta do all this stuff just to be ready for the YouTubes and the everythings. Y'all, let me tell you, last week broke my consistency streak. Y'all hear them bars. Only because y'all, this weather that be popping up, the tornadoes and tornado warnings and severe thunderstorms and y'all, this heat, and it's just it be taking stuff out. So as soon as they tell me it's gonna be some kind of storm, the tax cop is shutting down everything. Why? Because when I don't and the power goes off and bloops, my stuff, it don't be good. It don't be good. It take me a while to get everything back up the way I want it and running the way I want it and all this kind of stuff. So that's why we ain't post last week. We ain't post last week because we just had a couple of storms back to back. Stuff happened during the weekend, and I just didn't get it recorded in time. But I said, as long as it ain't raining, because I'm about to say wind or rain or this or that, I'm not gonna. How we gonna get there? We not singing those songs like that. What I'm telling you the truth is as long as the weather is cooperating with me and my technology does what it's supposed to do, I will be here. Okay? And so that is my apology to you all, because y'all know I've been being consistent, because I told you I was going to be consistent, and we got a series of things that we're going through, explaining stuff to you in a way that is palatable, able for you to understand, able for you to make decisions with, etc. So I just wanted to tell you that. So I'm also gonna give you like little updates of what's been going on with me personally as a tax cop. Things are changing, things are growing in my firm. I'm so grateful to God on that. And life is just lifing. Life is just lifing. I am a mother of four. For those who do not know me, this is your first episode turning in. I am a mother of four, a former government employee that had 21 years of service. I'm an accountant's accountant who loves the tax side of accounting and auditing side of accounting more necessarily than the debits and credits of accounting, even though I can do them. I am the principal owner and founder of Total Tax Experience. That is my firm, where we look at everything from the time a transaction is posted until you get that notice from the IRS and you need somebody to help you with some stuff. IRS, state, whomever. I just actually was mailing something off for a client today for us to get a waiver on a penalty waiver for one of my clients that's in Virginia. So that is what we do here. That is what I do at the Tax Cop. Really, the whole Talks with the Tax Cop podcast is really a way for us to have conversations in this space so I can demystify what is taking place in this arena. I know people hate taxes. Let's get real. Let's get a little bit closer. Let's bring this joint in just a tad bit. Anybody who's watching the experience, I get it. Let me zoom all the way in. Boo, I get it. However, I want you to be aware of the fact that taxes ain't going nowhere. Like, I really try to think of another way to say it, but it's not. Taxes ain't going nowhere, right? Taxes are going to be here. They've been here. They was throwing stuff off of ships, Boston Tea Parties and stuff, right? You know, taxes gonna be here. The information you need to know is how to make sure that you are paying your fair share of taxes as a small business owner, as a W-2 employee. You need to understand where this is coming from. I really want to empower people so that they understand that they are in control of their tax situation, and taxes are not just happening to you. Because y'all feel like you went on a date, somebody violated you, took your purse, took your goods, right? And you had no control. And in reality, you do have control if you know the rules. If you understand, and if you watch the previous episode 9, when I really break down what the calculation is, then you'll understand really how this game is played, especially for my W-2 people. Like, understand the numbers. When I tell y'all taxes is basic math, it is basic math. It is not calculus. You'll hear me say this over and over. I know. I done took calculus twice. It's not calculus, okay? It is basic math. Addition, subtraction, multiplication, and division. The issue is the rules associated and the laws associated with the tax code and who they're in favor of, right? Most W-2 people do not have anybody lobbying on their behalf, but a lot of investors, economists, environmentalists, business owners do. They got the money to work with lobbyists to get certain things in the tax code that works in their favor. And I know it's not fair, but it's important to know what these rules are so that you can actually get yourself into a position where you could benefit from some of these rules that are out there and available for anyone to actually use if you know what they are. Okay? So, y'all, I'm going to actually be working on, my team and I are working on making clear segments for this podcast. So exciting things. Y'all know your girl been in training. She been in training. She been learning some stuff. We're going to do stuff from different angles. I don't want to be just a talking head. I really want to be able to get to a point where we can live stream some of these episodes, have some interaction with the community, build up this community so that you know that we are a resource and a place, a safe place for you to be able to ask your questions and not feel like you are being chastised or demeaned or anything. Anybody who knows that works with me personally knows that I give you hard love. Certain stuff y'all be trying, I be like, you can't do that. I'm gonna tell you why you can't do it. You can't do it. It ain't happening. You can't do it, right? And so therefore, let's not even play them games. Let's not even do it. But let me educate you as to what you can do and how far you can go. Because, baby, I don't charge to go to jail prices. I keep telling people I do not charge to go to jail prices over here at TTE. We don't do that. Ain't nobody try to go to jail. IRS do got my fingerprints on file because I can e-file, and I don't want that smoke. Let's just be real. I don't want that kind of smoke. And so since I don't want that kind of smoke, and I ain't trying to get that kind of smoke, I'm taking risks, right? But I do things when we're brand new and working together and we're learning how to deal with each other. It's very conservative, just because I don't want that smoke, and y'all don't want that smoke that these people be giving either. Okay? Because I tell you, even though the IRS is a gentleman, the states is a bad boyfriend stalking you on Instagram, and they don't let up. Statute of limitations, that stuff don't exist like that. So we ain't playing with all these states out here in these streets like that. All right, so that is my introduction, y'all. Anybody who is faithfully watching, faithfully listening? I need to go look in the comments on where the podcast is played. If anybody got any ideas for some intro music that would go with, the TaxCop, and no, I don't want no bad boys or nothing. I gotta go and try to do some licensing and stuff like that. Like, we're not doing all that, okay? But I want something so people will be like, oh snap, that's the TaxCop music. I gotta get some beats. I gotta get some beats. Y'all gotta get some beats. Anyhow, our first segment that we are going to go into is really today's session. We gonna go into let's go into audit and awe, right? And some of these things are just like, I want to go in this section and this segment of the podcast where we talk about things to really not do, right? So you don't be getting audited. Y'all be putting yourselves in some situations that look really suspicious, questionable, got people trying to figure out what the freak y'all doing, and then y'all want us to help you get out of these situations, okay? Now, this might be one that you all are fully aware of, but you may not be, okay? And so I've talked about this in the past. One of the topics for those who are out here rolling the dice, getting scratch-offs, going to get lottery tickets, who going to the casino. I don't live too far from a casino. I want you to be aware that all your money that you bringing in is open and right for being taxed. Okay? And so your gambling winnings are being reported to the IRS and to the state on at the IRS level is being reported on a W-2G. A W-2G, right? And so when you are reporting this income or not reporting this income, let me tell you, they know. I have a couple of situations where I have dealt with clients where we have gotten correspondence audits, notices from the IRS that say, hey, so y'all filed that tax return and you left some money out. And I'm like, what are you talking about? You left some money off. You need to go compare what you have to what we have, because the casinos told on you. They dry snitched by giving us these W-2Gs. And the lottery people told us what you won, and what you put on that paper definitely don't match what we got on our records. So we gonna need you to go on and look at that again. By the way, since you underreported that income, we're gonna charge you a penalty for underreporting, right? Because sometimes I significantly underreport because your girl don't know everything, because I'm going off of everything that they give us, right? My team and I are going off of everything that was provided to us with them W-2Gs. And so one of the things I have started to do, and some people are like, right? So I'll file an extension, especially if I see you got a lot, and I'll be like, hold on. Because transcripts, wage and income transcripts don't normally come out for that year until the summertime. So they don't come out till like late May, early June. If you got a lot of if gambling is, and I'm like, I think you're a professional poker player or something like that. What's your job? Because you going to the casino like that. I may do an extension. And the reason why I do an extension is because I want to pull a copy of the wage and income transcript to make sure we have covered every single piece of documentation that they know on you. Otherwise they will send a notice. And I'm not telling you this because I think it. I'm telling you this because I've had it happen to a few clients where we've got to go back and be like, oh, snap, we underreported. And I got to go back and look and be like, well, you ain't tell me all this to my client, or you did tell me a portion of it. The other thing I'm always adamant about asking, and my clients couldn't get it at first, I want your statement from the casinos, or your notes that you keeping. For those of you that's doing scratch offs and winning and hitting it, like whatever, I'm gonna need you to keep a notebook of your losses. I need to know every time you're going by and record that, because you can offset gambling winnings up to your gambling losses. So let's give an example. I'm just gonna roughly throw something out here. Let's say you're a $50,000 winner, right? But in reality, you paid. You done lived your life, and I got some people who do this, right? You went to the casino and you done ran that thing up, and you done put $60,000 in back. You done gave them your winnings plus some, right? You won $50,000, but in reality, before you ever get to that $50,000 winning, you invested. Investor is a terrible word, right? You done put $10,000 in to get that $50,000. And then when you hit, you was like, yo, I feel like I get some big money. Let me go on and flip that thing. And then you gave them the whole $50,000 back. So even though you won $50,000, you might have, you done gave them people $60,000. Well, we can only take gambling losses, right, up to the winnings. $50,000. But we need support. And every casino doesn't do it the same way. But, and definitely when you go to the gas station 7-Eleven and go get them, they're not keeping track of how many times you come in there to get them scratch offs. So you need to keep track of that information. And when you are working with a tax professional, you need to provide that documentation to the tax professional. Another thing that I tell my clients when we're talking about this is, every time you win, whether it's big or not, I would encourage you to go on and take some money out. Have them, before they give you the winnings, go ahead and tell them to take some taxes, give the taxes to the IRS, and give it to the state. Just do it. The reason why I tell you this is because I've seen it. When I tell y'all, I have had more than one client that we have had to go, and it's gotten to the point where one of them is just a correspondent. So I've never interacted with the actual IRS rep. I got 2 clients I've actually had to interact with the IRS rep, and this has been the last 3 years. Okay? Where I've actually had to interact with the IRS representative, get on the phone, talk to them. Hey, what documentation can I give you? What do you need to be able to be like, all right, this is good to go, and you're satisfied that this is what the lawsuits are like. What do we need? Because right now you saying that my client didn't pay enough in taxes because you count all of that as income and not considering that they had some losses, right? So you, as people that are out here, and gambling is so easy because it's, you know what I'm saying, it's on our phone. You've been against, like, we get ready to go into football season and stuff like that. I just want you to keep in mind that the computer is hitting it, right? So they know when you win because these people are reporting it. So therefore, you don't want to be like, that's a way of audit. So audits are checks and balances, notices. There's several different types of audits. We'll go into a whole nother podcast at another time, talk about the different types of audits that exist. But I do not want you out here feeling as though you are invincible or sweating bullets when it gets to that point because you didn't keep your documentation. So you need to know all your winnings because they're reportable and they already tell it on you. And you need to know all of your losses as it specifically pertains to the money and stuff that you have put into your gambling hobby. I'm going to call it that, right? Because I'm not going to call you professional. I'm going to call it, some of y'all professionals. I'm not a gambler like that. I go to the casino strictly for the food. When I do go, and for the entertainment. And look, because I just be like, I be losing track. When I be like, it's dark, it's smoky in here, it's this, that, and the other. And I ain't for scratch offing. I will go and get distracted by a Slurpee before I ever go get a scratch off ticket. So that's me. That's just, I'm not passing judgment. I'm just telling you I know how I am. So I'm not doing any of that. But I do know the auditor and the accountant in me does know to keep your documentation, keep track of your winnings. God bless to me. I do keep track of the winnings and to definitely keep track of any losses or any money I put in so that I can offset that and making sure that they not taxing me on something they ain't got no business taxing me on. Okay, so that's our Audit and Awe segment for this week. Audits and I'm gonna come up with some sounds, y'all. I got my stream deck. I got to get it all set up. Audit and Awe. Okay, now balancing the beat. Y'all let me know if y'all like the name of these segments. We playing around with some stuff just to see if I can actually make this flow the way it does and not have y'all be bored to death, right? So, balancing the beat. Let's go into, all right, so in today's segment of balancing the beat and reality, I really want to actually do an educational piece. That's what I'm going to do, right? We are going to go into so last week, 2 weeks ago, right? And balancing the beat is really going to be our leveling our field, our playing field, right? So that every taxpayer out here kind of understands how stuff works in this realm. So we're going to talk about one of the remedies we talked about last time was payment plans. Today, we're going to go into a remedy. I'm going to the other end of the spectrum, all the way other end of the spectrum. We're going to currently not collectible. And the resource I'm going to use, y'all, is the taxpayer advocate. Let's give it up for the taxpayer advocate. Why? Because the taxpayer advocate is an entity that sort of lives inside the IRS because it's associated with the IRS, right? But it's outside of the IRS. It is your remedy, right, that we all use when stuff not going, and we didn't try every single avenue within the IRS, and we played by the rules, and we did everything we needed to. We like, yo, who can I get to? Like, you know, who can I run to give me some help? And the taxpayer advocate serves in this manner. Okay? Now, my hat goes off to the taxpayer advocate because over the last 3 years, since the panini, right, the taxpayer advocate has actually had to be pulled into the process of doing certain things that it, thank you, had to be pulled into. I'm sorry, y'all. That anybody who's listening, my son came in. It is me and my husband's 19th wedding anniversary, and him and his friends came in and wished us a happy wedding anniversary. So, as I'm recording it, we've been together for 19. No, we've been married for 19 years. We've been together since 2021, latter part of 2021. When we met in November. We've been together since December 2021, early part of 2022. I said 2022. Y'all shoot me. 2001, because I got a 17, about to be 18-year-old. So 2001 is when I met my husband. November 2001. We've been together since late 2001, early 2002. We've been married for 19 years. The day I'm recording this. So it is our 19th wedding anniversary. And our oldest child will be 18 in a week. Y'all do the math. Anyway, as I was saying, we talked about payment plans, and now we are talking and focusing on a whole different type of resolution option that's available to you all. Because remember, I told y'all, go back. It's only 4. There's only 4 ways to get out of the situation, right? We got payment plans. Some people will qualify. We got payment plans, our full pay, our partial pay. We have offers and compromise. We got this one I'm getting ready to talk about, currently not collectible. And then we got penalty abatements and other things like that. So when people tell you this is great audits, and I can do this, like they just putting the marketing sauce on top of stuff. Today we're going to talk about currently not collectible. We'll get into it. We'll take it to a certain depth, but I'm going to use the resource because y'all know the auditor and me take y'all to the source. So therefore, we are going to go to the taxpayer advocates page because that is the best source to use where they explain, and we're going to break down what currently not collectible status is, what to do, how to do it, all this kind of stuff. I'm getting ready to play a video that is on their site so that we go to, I had the screen up. No, I don't want this. I should have set this up before. Here we go. All right. Let's play this video.
If you owe money to the IRS but can't pay it now, deferring payment is one option to consider. Visit the Taxpayer Advocate Services Tax Toolkit website for detailed information. But for now, let's take a quick look at this option. If you can show the IRS that paying both your taxes and your living expenses would cause you financial hardship, you may be eligible for Currently Not Collectible status. Currently Not Collectible doesn't forgive your tax debt. It simply delays payment until you can afford to pay. And in most cases, you must provide detailed financial information to the IRS to qualify. During this time, penalties and interest will continue to add up, so if you're able to make payments toward your tax debt, you should look at an offer in compromise or an installment agreement as a solution. However, if your financial situation is severe and you qualify for Currently Not Collectible status, the IRS must immediately release any levies on your wages or salaries and temporarily suspend collection actions. But they may file a Notice of Federal Tax Lien, which is a legal claim against any property you own in case you fail to pay your tax debt. The IRS will also take any future tax refunds and pay them against your tax debt, unless you can prove you need the refunds to pay basic living expenses. To apply for Currently Not Collectible status, gather all the information you have on your monthly income and expenses and use it to fill out and submit Form 433, Collection Information Statement. If your tax liability is below a certain amount, you may not need to submit the form, but if you do, be sure to select the correct Form 433. There are different versions for businesses, individuals, and self-employed taxpayers. After reviewing the form, the IRS may contact you to verify the information, so be prepared to provide proof of your income, expenses, and assets. After your account is placed in currently not collectible status, the IRS will review it periodically and may request updated financial information to review your ability to pay. And when you can afford to pay, the IRS may start collection actions again. Contact the Taxpayer Advocate Service immediately if the IRS takes collection action other than filing a Notice of Federal Tax Lien after you've been approved for currently not collectible status or if you were not afforded your rights as a taxpayer. The Taxpayer Advocate Service's Tax Toolkit website has detailed information about the currently not collectible option. The toolkit also has information on low-income taxpayer clinics for those who need representation before the IRS but can't afford it. It also has detailed information about your rights as a taxpayer. Taxpayer Advocate Service, your voice at the IRS.
All right. So, y'all, I told you the IRS, the gentleman, y'all see? They even got a whole video that breaks stuff down for you. Now, let's go into this. Y'all heard it summarized, but I don't know if the audio was that great. So we're going to go into this just a little bit more just because I truly do want y'all to understand it. So I'm going to make this bigger. Let's go into it, right? Just so I can share it with you all. Okay, so currently not collectible. There are times where you agree you owe the IRS. What? You know you owe them people that money, but you can't pay them due to a current financial situation. Y'all know the last time I talked about the whole goal is for us not to be put into financial hardship. This I will tell you that the IRS and even states, the goal is not to make you they want their money because you rightfully owe them that money. However, the goal is not to put yourself into financial hardship. And if it would take you into a financial hardship, and a lot of people could be experiencing things like that now, just because of what's happened, jobs changing. We know technology is on the scene, people telework, just a lot has happened in the last 3 years. And so, all jokes aside, stuff can be tight, but you still owe this liability. And so, what you do during that time frame is you ask the IRS and say, "Hey, well, first of all, you know you owe this money. So what you're going to do is you're going to go to the IRS and you're going to ask to be put into a currently not collectible status." Okay? And as the video explained, in order to go into that currently not collectible status, you're going to have to come up off of your financial information. In other words, you're going to have to tell them your business. And I've said this to you all in other videos or in other podcasts where I've explained this. You're going to have to come up off the information and you're going to need to be transparent. You're going to need to know how much money you bring in on a monthly basis. You need to know your expenses, your monthly expenses. Now the IRS does have their own calculations for where you live at, how many people are in a household, that type of thing. But you need to know what your numbers are. And I've actually done this for a couple of clients where we've worked and put them in currently not collectible. When it's said in the video, they may come back and ask you for documentation to support those numbers. They will. I've been asked for clients, their card note is a certain dollar amount. They've asked me to provide a copy of the most recent card note statement. Lie to you not. Rent, they may ask for a copy of the lease agreement, right? They already have your W-2, so it's not like they don't have some of this information. But when you give them when you give the information to them, you're giving them a realistic financial statement. You're giving them a profit and loss, income minus expenses. Gonna tell them how much money you got left at the end of the month, or how much month you got left at the end of your money, depending on what your situation is. And sometimes it's hard to do this. Now, when they say they go back and they check, they're supposed to be checking on an annual basis. Sometimes they do check on an annual basis, depending on like the regularity. The computer will send out some information. I've not had any of my clients, and I do get notices for some of those clients because I have power of attorney. I've seen some where they come back and ask, okay, we need to update it 433. That's the financial statement. And I've seen some where they're like, hey, this is the annual check just to tell you what your balance is, that you still have outstanding, because it's currently still generating interest and penalties, right? I've had clients that have gone through, we had to put them in a currently not collectible situation because they're going through a divorce and they're trying to hash that stuff out between them and their spouse, or their former spouse, soon to be former spouse. I've had some people who were in the process of filing bankruptcy, right? And so we want to be very strategic in how we do this, because each one of those life events has a different impact, and the goal is truly not to ever put anybody in a financial hardship situation where they can't make it because they can't go get groceries, they can't, pay utilities, they can't have shelter because they paying the IRS or they paying the state. That's really not the goal. But we have to demonstrate how much you can afford to pay or not pay. This really is sometimes, okay, we need to come up with a different strategy. We need to put ourselves in this limbo situation because right now you might be in between jobs. And as soon as you get back on your feet, you can be like, all right, I know I owe this debt and I do not want this to continue incurring interest and penalties. So therefore, I'm ready to come out of that status. And it's all in how you leverage it. It truly is all in how you leverage it. But I do not want anyone to think that the only options you have are offering compromise or a payment plan, when that truly is not the case. When you really are like, yo, my back is against the wall. I got medical bills I'm paying. I'm dealing with this. I got different stress, all this kind of stuff. There are remedies. And but you can't sit in silence. You have to get it on file and documented so that you can cover yourself, right? So this is a whole thing about communication. Think about, let me give you an analogy. Think about when you go to the doctor, right? And it's a brand new doctor, and they ask you to fill out all this information about your history, your family's medical history, all these things, because you want them to be able to diagnose you properly because you're dealing with whatever issue. Let's say you have major headaches and things of that nature. You want to get the issue resolved as quickly as possible. You don't want to necessarily come out of pocket too much that you don't have to. Because medical can break you. It can really break you, right? You don't want it to end up in collections. You don't want them knocking on your door. You don't want to lose your house because of it. But it can get that bad, right? The IRS is in this situation. But when you talk to the insurance company, you're talking to the hospital and be like, look, I know you want to put me on this payment plan, but all I can afford right now is because I had a job when the procedure happened, but life got to life in. All I can afford is $150. Like, is there any way we can do something so that I can do this till I get back on my feet? A lot of times people will work with you. I'm not saying everybody will. I'm saying that sometimes they'll work with you. This currently not collectible is equivalent to them working with you, saying, hey, I get it. Your back is against the wall. This is a temporary solution to kind of get that relief off. So that's one less payment you got to worry about while you're trying to feed your family. Make sure you got shelter. Make sure you got utilities. And you're trying to get from A to B because gas done went sky high. Okay? I want you to know that this is a situation, right? Or we may slip you into this while we're trying to make sure you have all the documentation to get us together to submit the offer in compromise. Right? Because we're trying to get some relief as quickly as possible. And so there may be a tier that we take to get to that point. Got it? This is not a long-term, this should not be, let me give it to you this way. This should not be our long-term plan. Unless, because some people do have health situations that and they're the primary breadwinner in the household. And because of this, they end up in this a little bit longer. But be mindful that the financial statement, that form 433 is going to be your proof to keep you into this status. Does that make sense? I wish I could talk back to me. Somebody over there on the thing. Yeah, it makes sense, girl. I need a sound. Yeah, it makes sense, girl. That's a good sound. I'm gonna get one of them. Okay. Now let's talk about what you need to know when it comes to currently not collectible. Shall we? All right. While you're in the CNC status, the IRS generally won't try to collect from you. But if they do, we got some remedies. You get some help. Okay, that's not supposed to happen. You either reach out to the taxpayer advocate, you reach out to a tax professional, you get some stuff straight. All right. They're not supposed to levy your assets or income, but the interest and penalty not gonna go away. It's not going away. And any refunds that you get down the road, they may apply, rightfully so, because that's what they should be doing, to any outstanding debt, unless it's going to cause you a further financial hardship. And then you got to prove that, right? Before they put you in this account status, they may ask you to get in compliance. That means file any past due tax returns, get you in homeostasis, right? And in most cases, bringing you current, I told y'all before, is the current year and 6 years back, depending on what's going on, okay? If you request, now mind you, if sometimes when we do this, the bill gets bigger. The bill gets big. Sometimes it doesn't. Sometimes, and I've done this for some clients recently, sometimes we have to do 3 or 4 or 5 years tax returns so we can get the information. And then we find out that some of them, if we're in the statute of limitations for the refund, that 3-year window, sometimes those refunds that were supposed to be applied to older you, because you're like, oh snap, I got a refund. They take that refund, they apply it to the debt, and knock stuff out. It gets you back to homeostasis, right? So anything can happen when we file those old tax returns. Anything can happen. That's why working with somebody who understands what your big situation is, that you ain't filing just to be filing, right? Even though you should have filed in the first place, but you're filing as a way of remedy to figure out what it is and get your whole package under control. You need to have that discussion. That this may end up being a remedy depending on what that total is, the total amount owed is. Now, if you request the CNC, the IRS may ask you to provide financial information, meaning not just the form 433A. As I told y'all, they may be like, all right, give me a copy of the most recent car note payment statement. I want the actual statement. Give me a copy of the lease. Give me a copy of, you say you got the medical, let me see the most recent, you on a payment plan for medical, let me see it. They may ask for that just so they have it for their records. They want to build their case and make sure that they cover themselves. And there's nothing wrong with that. You need to have that documentation ready. I'm going to tell you, for offering compromise, you're going to have to come up off of that documentation anyway. I'm going to say it again. If you're doing an offering compromise, they're going to ask you for the documents. They're going to want 3 months of bank statements. And if they don't do it in a timely fashion, they're going to be like, give us the most recent bank statements. When they get to your paperwork, they're going to ask you for paperwork. It's part of the process. So have the paperwork ready. Have the paperwork ready. Know your financial situation. Know how you're going to maneuver in this space. All right? The IRS may collect the balance you owe if your financial situation has improved when they conduct an annual review of your income. If they come back and ask you for an updated financial statement, trust and believe you better have your information. And they might say, you know what? You now got money at the end of the month. We want that. Just be prepared, people. Just be prepared. Now, let's go into this. The IRS can attempt to collect your taxes up to 10 years from the date they were assessed. That's our collection statute, right? The IRS may suspend the 10-year period in certain circumstances. The time the suspension is in effect will extend the time the IRS has to collect the tax. However, because the IRS is such a gentleman, he's not going to suspend interest and penalty charges. Them joints going to continue to grow. So you may want to consider other possible payment options within your means before asking the IRS to place your account in CNC status. Because they may just decide to be a pain in the tail. You never know. Most cases, they're not. but who knows? Same information, right? If the IRS, they ask you to they ask you to file any past due return so we can figure out the total amount that's owed. We want your total liability. They may ask you to complete a 433A for W-2 and self-employed earners, a 433F, right? That's a self-employed, and collection statement, or a 433B for businesses. Financial statement. Come up off of the information. They may ask for documentation. I already told y'all that. The IRS will continue to charge monthly late payment penalties and interest on your account. So until the balance is paid in full, you're going to continue to incur that interest and penalties. And they're going to require you got to, now, okay, this is taking care of the past stuff. If you owe estimated tax payments or anything like that, you got to do your withholdings. You need to be doing that correct from here on out. And I would encourage you, if you don't know your situation, and there's two methods you can use. You can go to the IRS withholding calculator to figure out how much you need to withhold if you're a W-2, or work with a tax professional to help you with tax planning. So you can actually figure out how much liability you may have. How much do you owe? So that way you can make sure it's being taken care of throughout the year, or you at least planning for it, so it don't feel so tight. So let's go here. There's a lot of guides and stuff like that, resources on the IRS Taxpayer Advocate website. Do not ignore any notices. Make sure you're filing all your returns. Get help. And if you got to go into a payment plan, go into a payment plan. I'm not making this stuff up. IRS decides you can make some type of payment. You still agree. You may want to request a conference with the IRS collection manager. You may want to hire an attorney, a CPA, or an enrolled agent. Yours truly is an enrolled agent, okay, to represent you. Like, you get to this point, this overwhelming, I don't know how to make these moves. You may want to hire one of these three, because we are the only ones that can represent you before the tax authority agencies when it comes to this type of matter. Let me put it that way, right? Because you can get a personal representative and stuff like that. It'll go up to a certain point. But really, if it get that sticky, you don't know what to do. But understand, an attorney, a certified public accountant, or an enrolled agent, we're going to charge you for your service, for the service. So really understand what you're getting yourself into. Like, I want to make it go away, this, that, and the other. We're going to charge you. We're going to charge you because of our skill, our expertise, and the time it's going to take. We're going to charge you. So don't expect that it's going to happen. It's going to happen for free. Depending on your income, you may go to a low-income taxpayer clinic and get some assistance there. Sometimes you want to maneuver this stuff. Sometimes y'all do it. Y'all say the wrong thing. Y'all be like, well, guess what? I owe even more. Because y'all don't know what to do. And there's nothing wrong with not knowing what to do. That's not your lane. But I just want you to be aware that I'm not making this up. An attorney, a CPA, or an enrolled agent, which I happen to be, we're the ones that can help with stuff like this. All right? How this will affect you. The IRS may keep your tax refunds and apply them any debt. That gonna happen. And most 9 times out of 10, they're gonna take you out. If any refunds, they're gonna apply it because you want that stuff to go away. You can still make voluntary payments. That does not be an official payment plan. You can still make payments. When you get a little bit of cash, throw it up, right? The IRS shouldn't levy your assets or income, so not garnishing your paycheck and stuff like that. That should not be happening. Unless later federal tax liabilities arise to remove you from this uncollectible status. What? You can be knocked out of the status. You need to know what's going on for your stuff. The IRS may file a notice of federal tax lien, even if your account is placed in CNC status. The filing of a notice, me and this camera, right? The filing of the notice of federal tax lien can affect your credit rating and your ability to sell property or other assets. They may contact you to update your financial information. That's that Form 433. And the IRS is required by law to notify the State Department if you are certified as on a seriously delinquent debt, but the IRS has discretion to exclude debts for passport certification. Some of this I'm hearing, right? So people are like, man, I can't get my passport. You got to pay the people their money or get into a payment plan. In some states, I live in Maryland, they not letting people get their driver's license. You're not going to be out here just doing whatever and not get these people their money. You gotta figure out how to get this thing corrected. You cannot keep putting your head in the sand. If the IRS sends you a notice about your tax bill, call the number on the notice to discuss your financial situation, or reach out to your power of attorney so that we can talk about it on your behalf. If that make you nervous and you can't do the talking, you gonna hire somebody to do it for you. The IRS will take your updated information and decide if you still can't pay, and if you're gonna stay in that status. All right, y'all. I don't be making this stuff up. I love it. You may use the IRS withholding calculator to figure your federal income tax and withholding. I preach on this tool. I live by this tool. I use this tool for years. If you're a W-2 employee, stop ignoring that they got this calculator that exists for you to go out there and make sure that you're adjusting, that your withholdings and your estimated tax payments are what they need to be. Go to the spot. I'm going to click the link for anybody who want to see it. Bam! And they tell you how it works. And you put it together and you do your stuff. There's actually a video, it's an old video, I got to update it, on my TaxCop website, where I actually have that as one of our frequently asked questions, is a video of me explaining how to work through the withholding calculator. Okay? So that's on my TaxCop website, walking people through the withholding calculation and how to use it in your favor. I'm a stickler for this. When I was a W-2 employee, I played with that joint all the time. It is way better. It saves stuff. It is just, the interface looks way better than it did back in the day. It's a great tool. It's a great resource. Okay? If you still need help, right? You got low income taxpayer clinics. You can go to the taxpayer advocate, and or you can work with an enrolled agent, an attorney, or CPA. Okay? And I know you're like, yo, I told you I don't have no money. That's why I'm in a CNC. I can't afford to be paying you, which is why I'm doing this podcast, to explain the remedies that do exist, so you don't feel like, oh, Stan, I'm going to get these people this money and you don't qualify for offer and compromise, right? We're going to talk about offer and compromise and go through the offer and compromise wizard so y'all know what's going on, because I don't want you out here because you keep hearing the commercial on the radio or something like that and you don't qualify. Sometimes you just need to do a consult with somebody so they can help you figure out what your situation is and point you in the right direction. Don't be mad at us who are in this space if we say, because it's a business, all right? And if we tell you, here's the other places you need to go. Really, it's because we ain't trying to hurt your pockets. You don't qualify for one of these other things that where you really truly need us to guide you and hold your hand for a fee. So we'll point you in another direction because we are not trying to put you in financial hardship further. We are truly, truly, truly trying to work with you and get the situation resolved for as minimal as possible, but at a fair wage, because we're taking care of most of it. And we in it with you, right? So you're like, but I know, if some people will tell you, I'll get you an offer and compromise and can't, but they'll take your money. That's not going to happen over here at the TaxCop. It's just not going to happen. And there's a lot more people in my space who are in this space doing resolution who we're not going to operate that way. We truly are doing this to serve. We are truly doing this to educate. We are truly doing this to empower, because we know life get to life in. But we ain't out here trying to do 100% pro bono work. If we're doing pro bono, that's a decision that we make as business owners. But understand that at the end of the day, this is a service for a fee that we are offering. I'm out here just educating you as to what your resources and your available opportunities are to get some of this stuff off your plate so that you can get the situation fixed, and to make sure that you are educated and empowered in this space to make the moves that are right for you and yours. Okay? So that's what we have. I'm going to share this link to this website so y'all can go read about currently not collectible on your own. Look at the resource, figure out what your taxpayer rights happen to be. Just know that these are options and you can read it for yourself. For those who are just listening to the podcast, those who don't go on YouTube and don't see the screen, I really want you to be able to have this as a resource that you can refer back to. And that's what we have for this segment of balancing the beat this week. Boom, boom. I think each section should have its own like music associated with it too. What y'all think? Let me know. Let me know. We have some Fraud Squad funnies that are going to come. I'm not going to do those this week. I got some other things I need to take care of. But I just want to recap what we did. So we talked about what happened with me over the why y'all didn't get y'all podcast last week. My apologies. We're going to get it straight. We're going to really get this flowing seamlessly. And then anybody who on the YouTube, you will not see all the signs and stuff like that. I'm getting it together. Production take time. Your girl in these streets getting educated, team getting educated so we can make it move as smoothly as possible. Y'all, it's clunky. But anybody, it's a podcast. So for those in the audio experience, need to know that, right? Today is my, the day I'm recording it is my 19th wedding anniversary. Woo, woo. Shout out to my wonderful husband who is, we still like each other. We love each other, but we still like each other. 19 years later, 4 kids later, all kinds of experiences later, we still together and we actually got our own giggles and language, and we can look at each other and be like, what? Jokes. I'm honored to be the one he picked to be his wife, and I still want him around, and he still want me around. So that's a blessing within itself. We talked about Audit Awe. Our focus was gambling, right? Gambling winnings versus gambling losses, and the documentation you need. Y'all know the auditor and me gonna tell y'all. We gonna talk about documentation. I will show you some examples in future episodes. If there's any topic that you're concerned about, is like, is that audible, or can we let it go away? Let me know. And then balancing the beat this week, we focused on really making sure y'all understand what's happening, right? Really knowing what the another resolution option is when it comes to currently not collectible. We broke that thing all the way down for you all. We gave you the resource. Y'all, I live by certain things. This is the space I'm in. I live by certain things. Y'all see even on the Taxpayer Advocates site, they telling you who to work with, how to leverage the withholding calculator. I told y'all, and I'll post the link to my website for where I do. Y'all forget a video. It's not great quality. Okay. We're going to upgrade it. But me going through the withholding calculator myself, so I can break it down for you all and use it as a tool, leverage it as a tool. All my TaxCop crew that's out here, I appreciate you all that tune in on a weekly basis. Those who actually am like, she ain't post. I got an issue because the girl didn't post. And let us know what you want to hear. What topic that you like in the back of your head been like, I've been afraid to ask anybody. I want to know really how it works. And I feel like the TaxCop will break that thing down and tell me the freaking truth. So know that this is a space for that. If there's anybody that you feel like should be interviewed on a podcast, right? Because I love talking to small business owners. I want us to really have a space where we understand that we are more alike than different, and that you can take a nugget from another business owner and be able to leverage that one piece to make you keep going, because it's times that we want to throw in the towel, baby, and be like, F this joint. I want it. Jesus, take the wheel away from me. Drive the whole car off the cliff. Don't bring it back, and don't report that it was me. That was my cop, right? Sometimes we just get like that. Or maybe that's just me. I get it as a business owner. I definitely get it as somebody who works with a lot of small business owners, brand new entrepreneurs, people that are in the space from 0 to 10 years of business that are really trying to make sure that they have it so that they can scale up to where they want to go to. I love working with people in that space. And that's what we have. This is what this podcast is for. If there's anything you want to talk about, anything, please leave comments on all the different locations. Know that we're here to love on you, to serve on you. And y'all, that's it. Cause I need to go get some water because it's hot up in this studio with this cameras and this that. I ain't turn the light on today. Other than that, enjoy yourself. Y'all have a great one. Talks with the Tax Cop, episode 10. Episode 10. We behind. I got to be recording, y'all. We out.